All right, guys, what's going on? What is Gucci, gang? Welcome to Wall Street Wednesday. You guys excited? I don't know. I think it's exciting. um, you know, still starting the year off strong, right? With some momentum, doing some work every single day, becoming better every single day. And another I told you so. Right? I mean, that's a given. Right, chat? Right, Roberto? Jorks, Eric Marshall, Mason. Mark, appreciate that. Cavalis, Monkey, Sean, Omar, Torty, Max. What's good, everyone? What is good? What is good? It's been a interesting morning. Probably won't be a full stream today. I say that and then I rant for 45 minutes and then the time flies by. So we'll see how it goes. We'll figure it out as we go. Right, 2020? All right. What was the bias yesterday? What was the bias yesterday for NQ today? Look at this shit later. Let's get Robert. We have Robert and then Roberto. I'll try and not call both of you Rob. Eric Mark. Mason said Creed was hired 2020. Right, chat. Right. We said yesterday, well, I said yesterday many times that the higher time frame should be bullish. Chat. Right? 26,123.5 is these highs way up there. Right? Way up there. Low set. Crossing 50% on the 19th. Getting back into a discount on the last day of the year. And then that Friday, taking out that previous day's low. Excuse me. Taking out that, or Wednesday low, rather. Trading into a regular trading hours gap in a discount, right? Small turtle soup here as well. And this should be, right? If this was our first leg, we did get kind of a fairly deep retracement, but if that is our second leg, then we should be, generally speaking, thank you, generally speaking, bullish, right? So you see how like the brush tool just outshines any of the indicators everybody looks at. Fucking wild, isn't it? That's some wild shit, isn't it, chat? That's okay. You have the same brush tool. Your brush tool is no different than my brush tool. My brush tool is no different than your brush tool. So anyway, 8:30. There's our equities. Open. We trade lower a little bit. and we have been trading higher and higher. So check on your friends who are short, man. Not who are like you're taller than them, so that makes them short. I have a lot of short friends, but if they're trying to short indices, call them and check up on them. Say, hey man, are you good? You good right now? You all right? Because doesn't look good. Doesn't look good. I know this in here probably was a little bit nerve-wracking. Made it out. 10:25, we traded into this down candle right there. Just prior to the 935 level here, which is, it's not hard to do, but if you just zoom out, you remember that Friday target yesterday? Remember I told you that would be the next target, and we got that. So after that, last night and during London, yes, you're late, Oscar, blocked, man, good luck to you. We got a mitigation model here during London. I know it's a very distorted version, but nonetheless, low, high, lower, low, that being traded through here. Up candle right there, imbalance right here, bang, mitigation model. Wow. Crazy shit. Crazy. And then the launch. So what would the next target be? Not, I mean, I guess you could include that high, but the next target would be, that one's not obvious. This is a intermediate term high, so it would be this one, right? You notice how we have that high, but then we have a high on the left that's lower and a high on the right that's lower. So that would be the next target. That's what that is. Okay, so that's where that 935 level comes from. So when we rallied here, 1010, 1015, that retracement, right? Expansion, retracement. What's after retracement? Expansion. Bang. Crazy, crazy, crazy. Wild stuff, man. The stuff just keeps repeating. Keeps repeating, chat. Remember Mark Douglas said the consistency that you seek is not in the market, it's in your mind? Yeah. We know the markets are consistent. It's us who have to be consistent in our discipline and in our execution and in our risk management. Head and shoulder? No. No, we don't do that here. We don't do that here. But I can agree that the intermediate term low and the intermediate term high and a head and shoulders, I can see why you would think that's the same thing. The same way that people would look at a chart and assume that old support is new resistance or old resistance is new support. And people could say, okay, well, that is very similar to the law of the return. Well, yeah, they look similar, but the night and day difference is in the context. You won't write that down either, but the night and day difference is in the context. You can't just look at formations by themselves. That's why that shit doesn't work. You can Google smart money concepts. You can Google Wyckoff. You can Google entry techniques. All this shit will come up on Google Images or whatever search engine. And you can have the mitigation model entry, bullish, bearish. You can have imbalance entries, bullish, bearish. But yet when people get to the chart, those images, they don't really hit the same as they do with live price. Well, that's an imbalance. Oh, well, I got stopped out. Well, here's another imbalance, and I didn't take that one, but that one worked. And now you think it's a psychological problem because you didn't take that particular trade because you were hurt from the last one. But in both scenarios, the one that you took and lost and the one that you didn't take and that would have won, the difference is you're still missing the context. That's why it's not just, well, okay, that's a head and shoulders or that's a intermediate term low or whatever. The things that I show you are a puzzle. I'm showing you a completed puzzle here. That's the difference. That is what the framework is, right? I don't just tell you, oh, I think I'm bullish, market goes higher. Ah, I told you so. No, I tell you, hey, look, brothers and sisters, we have equal highs up here. The low's been set. We crossed 50%. This should be our first leg. This might be our second leg. If it's our second leg, we're not bearish. We're fucking bullish, right? X, Y, Z, who, what, where, when, why, time, price, context. So then when the market obeys me, when the market goes to where we reacted or predicted, we can say, okay, the probabilities were stacked and it did what we thought that it would do because time, price, and context, because following the rules, following the code that the markets are scripted on. That's why there's still no indicators. There's still no volume. There's still no depth of market. There's just my brush tool. That's it. It's a fucking brush tool. Because we are not using concepts individually. We are not using entry models just as entry models. We are using these things as an overall framework, okay? Because frameworks, meaning the market maker models, will offer every entry technique. Oh, fuck, that's a big one. You're not going to write that down either. I ain't going to say it again. Just move on. Okay? There will be whatever model you like will be presented. But it's not just your model. There will be a mitigation model. There will be an imbalance model. There will be an inversion model. There will be a law of the return model. All of it. That's the difference. So you might think, let's go back to the 1 hour. You might think, buying below old lows would work. And it does work in that scenario. Right? It works in this scenario too. It may not work in every scenario because certain scenarios are different. We might be in a higher time frame discount down here. We might be in a higher time frame premium up here. You see what I'm saying? Not every setup is created equal. We might be created equal based on the Constitution. But not every setup is created equal. There's different logics. There's different time. And there's different context. Trying to buy an imbalance, right, on the way lower after a massive run higher and after a higher pool of liquidity being met, those bullish imbalances probably are not going to hold. But you know what should hold is a higher time frame bullish mitigation during London. That's time. Price, that's mitigation. Context, we should trade higher. I gave you that yesterday. I gave you that 24 hours ago. That's at least 12 hours ahead of London. 13 hours ahead of London. You knew we were bullish and London went higher. Oh, big fucking surprise. Right. Because again, on this idea of like head and shoulders or intermediate term high and low, it's not things by themselves. It's not the pizza or the cheese. Or what did I say? It's not the pepperoni. It's not the cheese. It's not the bread. It's not the fucking garlic sauce and all that shit. It's the entire pizza together. So when you see the entire pizza together, You know, okay, well, this is our first leg, this is our second leg, or this is expansion, this is a retracement. This retracement after retracement should be expansion. You see what I'm saying? It's all of it together. And that's why setups, you can't copy and paste setups. This isn't Canva, this isn't Photoshop. Okay? It's not that simple. Drop some ones if you guys pick up what I'm putting down here. It might seem like I'm rambling a little bit, but you have to stop wanting everything to be so simple and to be so easy. Okay? Trust me. You don't want an easy woman. Ladies, you don't want an easy man. Trust. Okay? Things that come easy will go easy as well. All right? Easy things are not worth it. Good things take time. They take attention. You know, they take real effort. So don't be lazy. Don't just think, oh, well, I'm going to screenshot, you know, the mitigation model, or I'm going to buy the mitigation model mouse pad. You remember that shit? I know some of you have it. And that's great. It's a wonderful reference point. But trying to take that and put it everywhere, it's not going to work. You're going to get wrecked. Or you're going to try and short on days where the market's going higher, like some people did when I fucking told you not to do that. In a way. I didn't say it directly, but I hinted at not doing that. So, remember yesterday? Because I know a lot of people, ICT included. Oh yeah, I'm on my shit today. ICT himself also tried to short today. No. No, no, no. No, 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 no. We were bullish yesterday. Anyway, the point is, these lows down here, I know a lot of people looked at those. Well, that's London's low. That's this, that, and the third. That's low resistant lows. Okay. But yesterday, we fucking literally went over the fact that lows can be left open. We literally discussed that. Yesterday. Before this shit formed. Those can be left open. I told you that. But again, some of you still, you know, oh, fuck John, I'm not going to listen to him. Don't listen to me then. You short bullish markets then. When you get your fucking ass clapped, don't come back to me saying, what did I do wrong? You know what you fucking did wrong. What are you asking me for? Stupid ass shit. Don't ask me no dumb shit like that. Thank you, Roberto. Listen. Sorry, the caffeine must be... That's what it is. Sorry, it's not me. Maybe it's me, but it's definitely the caffeine. Sorry. Listen. As with any subject, right? Most people know how to read. Most people don't know how to read well. It's the same thing in trading. People know to buy low, sell high. People know that the best buys are on the way down, not on the way up. Right? People know the markets fluctuate. But in order to trade well, you need understanding. You need experience. You need to go in depth. You need to go beyond the surface of things. Wasn't that one of the I want to say I briefly wrote about that a couple of times in some of our emails. I won't waste your time trying to find it. But remember that one time? I drew like an iceberg, right? Something like this. And then I drew like a water line. It's supposed to be a water. And I was telling you that up here, I don't think I meant to do that. Um, up here is like the surface level shit. And then I told you below that is the stuff that's in depth, right? Like way down here, this stuff is in depth. That's what I'm talking about. That's what I'm talking about. All this surface level stuff, concepts by themselves, Google images, tweets, you know, little bits and pieces of information. And yeah, I give out tweets and stuff too. I give out that exact stuff. Yes. But that is the surface level things. That's why a lot of those people who took my shit, who took Trade House's shit and tried to go start their own mentorship fell short and fucked up a lot of people because they had surface level stuff and not depth. So when they started calling out trades, they were getting their fucking ass clapped because they didn't know what the fuck was going on and what they were doing. And it hurt a lot of people. And it makes smart money concepts look bad when those really aren't smart money concepts. That's why I used to get so pissed off when people did that. I'm like, you don't even know what you're doing yet. See, a lot of you don't know this stuff. A lot of you don't know this depth stuff. You don't know the backstories. You don't know the shit that I've seen. But there's a method to the madness, chat. You can't stay on the surface and expect like really, really in-depth results. It doesn't fucking work like that. You can't study just the stuff on the surface and expect to know all of the in-depth stuff. This is why you have to dive in. Pun intended. You have to dive in. Book of the month, How to Read a Book, Mortimer J. Adler and Charles Van Doren. Okay? I learned a lot just in the first, I think, what did I say, 10 chapters? I think I'm on chapter 11. The first 10 chapters. Yeah. Just the first 10 chapters, the first 150 pages, I learned a lot. And I've been reading for like 5 or 6 years. Well, probably longer than that, because my perception of time is fucked. It's probably more like a decade, but maybe like 8 years. Who cares? None of that matters. What matters is you can trade for a long time, but still not know how to trade well. You could read for a long time and still not know how to read well. You see what I'm saying? And that's what the philosophers were trying to do. A lot of people know how to live, but don't know how to live well. That's philosophy. That's philosophy. So when you see that subjects have depth to it, who, what, where, when, why, how, you know, history, important influences, all that type of stuff, it makes subjects so much more interesting, and you can spend so much more time on subjects. Why do you think a biography of Abraham Lincoln is 600 pages? You know what I'm saying? Like, there's that much to know about Lincoln, dude? 600 pages? And there's also many biographies on Lincoln. Like, oh my, there's not just one 600-page book. There's several 600-page books on Lincoln. Because there's childhood, there's history, there's the Civil War, there's slavery, there's, you know, the Union, there's all this type of stuff. You see what I'm saying? Trading is no different. We can make things simple. That's one of the laws, KISS, right? Keep it simple, stupid. Yeah. But the most simplest it can be is time, price, and context. If you take trades at the right time, at the right price, with the right context, yeah, you're going to take really, really good trades. But where the depth is at is understanding time. That's day of week, week of month, you know, yearly open, weekly open, daily open, session open, hourly open, macros that apparently still don't exist, right? Yet they keep setting lows and highs of the day. But whatever. Price, we spend so much time on that. That's the frameworks, that's the concepts, you know, the imbalances, the inversions, the mitigation, this, that, and the third. And the context, right? Liquidity. Why should price go down here? Or why shouldn't it go down here? Why should it go up there? Why should it do this? It didn't do that. All that stuff. So then, when you understand all of it, you can do like the stuff we did yesterday. We should trade higher. We should not trade lower. And then lo and behold, the market literally obeys you. Wow. Crazy. It's not crazy. We won't always get it right. What we are looking for is high probability. We know when stuff is high probability. We know when stuff is low probability. It's very, very hard to force high probability setups in low probability conditions. They're low probability conditions for a reason. They're high probability conditions for a reason. But all that stuff is going to be found in the depths, in the old videos, in these 1 hour streams that people don't want to rewatch. It's in some of the market reviews that I don't even want to tell you how many views it gets, but I can promise you it's less than it should be. And so you wonder why you get shit wrong, because you're stuck up here. You're stuck on the surface of things. Okay? Hell, even concepts have this same idea. An imbalance, you have a surface level idea of what an imbalance is. Oh, it's a 3 candle formation. You know, it's from this candle's low to this candle's high, whatever. But the in-depth part is, where is that imbalance in the range? What time did that imbalance form? Did it form in the direction of opposing liquidity? Or was it was it the last imbalance in a reversal? Was it the first imbalance in a reversal? Is it part of a balanced price range? I'm telling you, man. There's so much stuff you don't know. There's a lot of stuff I don't know too. This is why we focus on continuing to learn. You get me? Drop some 2s in the chat if you guys are with me still. I feel like I'm ranting a little bit. I like how the viewers are going up, but I want to make sure that you guys actually understand. I mean, it feels like a rant and it might sound like a rant, but I'm trying to keep it on the subject of trading and your development as a trader. If we were, I really don't want to get rid of a lot of these. Let's keep this, okay? Because this just came up in my mind and I want you to see it. I want you to see this. Let's drag this up here. Give me a second. This is going to take a minute, because I want to not have any other lines on our chart, or at least on our image here. So just give me a second. Like if this were a recording, this is all the stuff that I would cut out in our edits. You know, 30, 45 seconds of not doing shit. We want all the depth. I'm going to move on before I say something nasty. Okay. So if you were to look at an image like this, right? Each of these subjects, okay? Like this could be time. We should use a different color, like green. Okay. We could have the subject of time. We could have the subject of price. This is probably where I spend most of my time, like teaching you guys stuff, is like the price. You know, it's mostly technical analysis. Okay, context. And then on some of the other subjects, you have stuff like personal development, right? And let's say, even though a mindset would be under the umbrella of personal development. Again, there's an image in my head and I need you to see it. The problem is, okay, people, most of us do this. We spend time on the surface of things. We don't go in depth. And when stuff doesn't work, we hop over to a new subject. But guess what? If we never go in depth into anything, then you only stay, like, say you go into the aspect of time, you don't go in depth, you take trades at the wrong time, you get wrecked, and then so you go to another subject. Well, maybe it's the price. I need more concepts. I need more entry models or whatever. Oh, well, now I can stack concepts with an imbalance. Oh, okay, cool. I've gone in depth a little bit, whatever. If you don't have context though, and you're screwed there, you stop studying price and you go somewhere else and you go somewhere else. You see what I'm saying? That's an arrow, by the way. So if you stay on the surface, and this is for everything else too, even like, oh, well, John recommended a book and this fucking book sucked. And, you know, I'm going to do something else and something else. And again, the point is, if you never go in depth to things, if you're always on the surface, this is why, and you can tell me if you've done this, this is why people strategy hop, or they hop from mentor to mentor. You never go in depth into anything. Or maybe this could be a relationship too. You don't ask questions about the person that you're dating. You don't get to know them. I mean, you know what they look like. You might know if they cuss or not, right? But you don't really know who they are. And you wonder why there's disagreements and, you know, stuff like that. You don't know who they are. Marcus Aurelius said, don't be satisfied with just getting the gist of things, right? We have to go in depth with the time. We have to go in depth with the price, with the context, with your mindset, with your personal development. There's so many things to work on. What's good, Beverly? Welcome back. I know it's been a minute. It's all gravy. It's all gravy. You know, it could be the type of cat food too. You might not know, you know, on the surface, you might think, oh, well, this cat food, you know, my cat likes it. But in depth, that cat food might have some toxic shit that leads to that cat getting cancer in 5-10 years. And, you know, now Fluffy's gone, right? Because you didn't know you were giving them some trash cat food. You don't know. Sorry, if you guys didn't know, Beverly has a cat. That's why I said that. All right. Just as an example, I'm trying to connect with you guys, all right? Everyone communicates if you connect. John Maxwell. Anyways, this is what we have to do, folks. This is why trading is difficult. This is why personal development takes so long as well. It never really ends. Education never really ends either. And this is one of the reasons. You know what I mean? You might know Abraham Lincoln helped abolish slavery. That's a big fucking deal. You might not know that he wrote the Emancipation Proclamation. You might not know that his son passed away while he was in office. You might not know that his wife, you know, pretty much, she didn't go crazy, but she was massively depressed after their son died. You wouldn't know that Abraham Lincoln is just like me. I am just like Abraham Lincoln. His father worked a lot in the field doing hard work. His father was uneducated. My father's educated, but I don't know if my dad's watching, but Lincoln hated work, bro. He hated being out there with axes and shit. And you know what he did? He carried around books with him. And he would take breaks from work. And he got in trouble a lot because he would rather read than do hard work. I'm like, fuck, man. I'm with you on that. Hard work. Shit. Give me a book, man. I want to work smart. I don't want to work hard. But you wouldn't know that if you don't know much about Lincoln. You got to go in depth. You got to get off of the surface of things. She's a bougie bee, only high-end food. What is it, like fancy feast and shit? How do you go in depth efficiently? Is it just asking the right questions and going through the experiences? Well, 2020, that's why sometimes I kind of I go off on you guys a little bit. I'm like, you don't even know what questions to ask. That's why I say shit like that. It's not to be mean. It's just there's certain things that I learned too that I don't know. I don't even know what questions to ask either. Because that's how it is. When you don't know depth, you don't know what questions to ask. You see, you think you need to know what an imbalance is. And that you know it. You don't know it. You know it by its definition. Oh, 3-candle formation from this candle's low to this candle's high. Okay, you know what an imbalance is. That doesn't mean you're automatically going to know what imbalance is to trade. Or what imbalances you expect to be left open. Or what imbalance you expect to be disrespected and then changed into an inversion. You don't even fucking know. That's why I tell you certain things. Well, we really don't have a lot here, but let's say stuff like this, right? How do you know that this gap in regular trading hours? That's what that's from, right? Yep. You might not know we want the bottom half to be left open. How do you know if it should be or not? That's the things that I teach you. When you do see that we're bullish on a higher time frame and the bottom half is left open, or at least most of it left open, then you know retracements after that are probably going to be buying opportunities. Or we don't have it here necessarily, but let's go to Friday. Right? You remember Friday, we anticipated a run below those lows and then a run above those highs. We got the sweep below those lows. Then we traded at 105, we traded through what? This down candle and through this. Right? So that may become an inversion. But we have an imbalance on the way up, and then we have another one higher. So down here ends up becoming a balanced price range. We might not trade down there. Right. How do you know shit like that if you don't fucking learn it from somebody? Or, at a minimum, learn from your own charts. Why do I keep putting orders down here, man? I keep putting orders at the 618 or the 786 levels, but, you know, I keep putting limits down there, but they don't hit, man. The market just never... I was right, the market went higher, but I never got an entry. Right, because you put your entry at a fucked up ass place. You don't know entry techniques. You don't know how to enter in different phases of price, for an example. Or you might have looked at that 5-minute time frame and then went down to the 1 minute. Well, there's your last imbalance on the way to a liquidity sweep. Then that gets traded through, and then guess what? Lo and behold, that becomes an inversion to go higher. How do you know not to short that inversion to go lower? Or, sorry, short the imbalance to go lower before it becomes an inversion. Right. These types of things people don't know. That's why I spend a lot of time teaching them to you. The last imbalance in a liquidity sweep usually becomes the inversion. The first imbalance in a reversal typically is a breakaway. You've known about that for a long, long, long time. Guess what we got on Friday? We got the exact fucking rules that I gave you. Wow. Still no indicators required, baby. I had to throw that in there. Because this stuff is scripted, man. Fuck, I don't know what to tell you. I don't know what to tell you, chat. I told you yesterday we were in, or maybe it was ES. Remember I told you there was a gap up here and I wouldn't short it? Right? I was like, yeah, we're at the halfway point. What? I wouldn't short that. Bam, we went higher. Look at today. Look at today. Look at our equities. Today's the 9th, right? Or the 7th? Yeah. Right. Look at today. Where's our equities? Equities right here. What's our low of the day? What's our low of the day? We initially went higher, then traded down, and then guess what price is doing? Respecting the midpoint of that old gap. And then guess what? We left, not the entire bottom half. We did go to the lower quadrant, but guess what? We left a portion of that open. Ooh, that's an awful color. Just do black then. We left part of that open. Expansion, retracement, expansion. You knew about these levels already. We had these levels in advance. We've had those levels up there for the last couple weeks. Yet price is still respecting them. That's crazy, right? No, that's not crazy. That's not crazy at all. They do this. That's this, right? Gaps, imbalances, stuff like that. That's real support and resistance. Real support and resistance, because it's not support and resistance at all. It's price delivery. It's efficient or inefficient. And that's what price trades to. Liquidity and inefficiency. Okay? Liquidity and inefficiency. That's the surface stuff. That's the simple stuff. Price is going to go to one of two things. But how it gets there, why it gets there, when it gets there, that's the in-depth stuff. When should gaps, let's say, be respected to go lower, or when they should be disrespected and then become an inversion? We were bullish yesterday, and these same price levels are being respected today. That's not future telling. I'm not Stewie from Family Guy, okay? I don't time travel and then come back and say, oh yeah, well, price is going to do this. I don't do that, bro. Life isn't a cartoon. Trading isn't a cartoon. But you have to look at the details. You have to go beyond the surface. You have to go in depth. And that's the stuff most people miss. Okay? That's why a lot of these people, I didn't want to say this either, but if I were already here. That's why the MLM industry is the way that it is. It's in shambles constantly. People leaving one, joining another. Leaving that after a year or two, going to another one. This one's crashing. A new one's popping up. If there was anything I don't even know the word I'm looking for. Substantial. If there was something like solid there, and everything was done right, there wouldn't need to be a new MLM every couple of years. You could have one that lasts for decades. But it's constant surface level stuff. And when you don't lack depth, people don't stay. I've had students for many, many years. It would be different if all my students came in for 1 or 2 months and then dipped. Half the fucking chat are gold members here. Look at that. So, anyway, that's my thoughts for today. Okay? How to Read a Book by Mortimer J. Adler is teaching you, and it's teaching me too, that reading is not a passive activity. You don't just read the words and go, okay, that's cool, and then move on. That's how you skip over the details. You don't remember them. You don't write them down. You don't study them. You don't focus on it. And then you wonder why people ask you, oh, hey, have you ever read this book? Oh, yeah, I read it. I thought it was okay. Well, what's it about? Shit, I don't know. I don't remember. How do you not remember? You read the fucking thing. Because you read it, but you didn't read it well. So this book is teaching you how to read well, how to be an active reader, not a passive reader, how to be an active reader. And so when you see that and you go, oh my God, I didn't know there was actually this much work that goes into reading a book, right? How many other subjects do you know, or like, do you think you know that you really don't know much about? You know what I mean? There's a lot of information out there, and we won't ever know it all. But we can at least learn more over time, you know, slow and steady growth every day, or at least every week. And eventually, years down the road, you're going to be pretty fucking smart. You'll be able to start working smarter and not working as hard. Okay? Hard work is not what it used to be. You could get rich working hard, probably in the 90s, early 2000s maybe. But without working smart in today's world, you're not going to be wealthy. It doesn't work. If it did work, all the people that are in trades, not trading, but trades, you know, plumbers, electricians, people who build houses and shit, all of them would be rich. That's not the case. That's not the case. You have to work hard, yes, but you have to equally or more work smart. You have to invest. You have to save money. You have to grow money, right? You got to make money while you sleep, as Warren Buffett said. All right. So with that, can we end it here? Y'all be good, be blessed. Go in depth, man. Go in depth. Stop just wanting to get the gist of things. Sometimes, sure. We don't always have to know all the details. But as much as you can, learn some shit. Okay? I'll even end it with this. I know I cussed a lot today. I'm sorry, chat. But even Bibles come with annotated editions too. I got a John MacArthur Bible, bro. It's over 2,000 pages. 2,000 pages. And we're talking about thin pages too. Almost see-through pages. Because there's the entire Bible, yes, but there's references and commentary. It's over 2,000 pages. You know what I'm saying? That's in depth. John MacArthur probably spent his entire life creating that thing. You know what I'm saying? That's depth. That's understanding. So stop expecting these magnificent results with only surface level knowledge and surface level effort. I'll see you guys on Friday. Be blessed. Have an amazing rest of your day.